All right, this is a great chart by Bank of America, right? And what they did was they combined tech, discretionary communications, the digital economy, and then they compared it to the real economy, which would be industrials, financials, energy, and materials. And of course, there's a number of things we can take away from here. This is just really what this is showing is growth versus value, right? Growth being the digital, real economy being value. And we can see that, this has gotten up here around that sort of 50, 53% level in terms of the digital economy. And then the real economy has gotten down, the lowest level. But keep in mind this is really important. Look at the digital economy. It has made a series of higher highs and for the most part, higher lows. That's an uptrend. The real economy has made a series of lower lows and lower highs. Okay, that's the definition of a downtrend. So we have to keep in mind that there's a change in character in terms of the S&P 500, in terms of what is driving, the performance and what is driving breadth. Now, another important thing to recognize, look, between 1925 and 1955, the real economy bounced between, let's call it 60% and maybe 45%. It's hard to see on here with these levels. The digital economy bounced, between 30 and 10 or 12 or something like that. What happens if this relationship switches and the digital economy does what the real economy did back between 25 and 55, meaning we bounce between, say we go to 60% and then we correct, we go back down to 35, 40%. So this whole relationship shifts, right? Because what we know over time is the economy in the United States has shifted from an industrial economy to more a service and digital-based economy, okay? This is very big picture. Nobody knows whether it'll happen or not. Even if we do, say, bump up against 60% in terms of the digital economy weighting, we know there will be some big major crash that occurs, right? Nothing ever goes to the sky forever, and it'll fall back. But just something to keep in mind in terms of whether this may persist. And if it does persist, are you positioned properly for it, okay? All right, here's another great chart by Visual Capitalist that Callum Thomas shared on Twitter. And this just goes back to this whole growth versus value, digital versus real. This shows tangible assets versus intangible assets. Tangible, right, would be the asset heavy or the value sectors. And then sort of intangible would be the growth or the asset light, right? Intangible would be things like buildings and equipment, right? Inventory, land. And then when you look at intangible, you're talking about things like patents, brand value, customer data, right? Software, all that stuff. In the S&P 500, right? Look at the shift. It's now down to where 90% of the S&P 500 is intangible assets, versus back in 1975, it was like 83%. Okay, so you had this structural shift within the S&P 500 that it's very important to be aware of. Okay.